We are hitting a new low in Phoenix, a low we have not seen since 2009. If you watched my video last week, we were also talking about how prices have come down, and the bad news for sellers is I don't have any different news for you on that front. So we're talking about that today. We're also talking about how sellers want $39,000 more than buyers are willing to pay on average. We're going to look at those numbers. So let's get into it. Welcome to my channel. Thanks for joining me on this market update. So according to the Cromford Report, the latest CMI is 76.2. And I'll explain what this means if you're not familiar. But the last time that we saw a CMI in this range was April of 2009. So 16 years ago is the last time we saw a CMI at this level, as low as 77 or below. And the Cromford Report is saying this is a slow drift towards a market that favors buyers. And we all know we're already in a seller's market for most of the Phoenix metro area. This is just continuing to go in that direction. Let's take a look at what we see here. So supply is 107.4. So it's 7.4% above normal for supply. And we know we've been just increasing the number of active listings on the market every single week. We'll look at how that is trending. And someone asked to see that in comparison to 2009. So we'll take a look at what our active listing count looks like compared to those years. And then we have our demand at 81.8, which isn't terrible, but it is 19% below normal. So we've got demand not keeping up with supply, and it's putting the overall CMI into a buyer's market. Anything under the number of 90 on the CMI is considered a buyer's market, and between 90 to 110 is considered balanced. So we've been in this buyer's market for a while, but we have not seen this reading as low as it is on the CMI since April of 2009. Now, the Cromford Report is saying that today's situation could hardly be more different than 2009, but buyers have an advantage in negotiations that many of them do not fully appreciate. And I think that's mostly because of where prices are at today, where rates are at today, and the feeling that prices may continue to go down further. They're saying that the Cromford Demand Index has failed to move above 82.3. It's currently holding steady at just above 82. Which that was dated info because we're already at 81.8. So we're seeing that today. And supply continues to push higher. They also talk about the contract ratio, which we'll look at a little bit later in the video. And they're saying that it's sinking back towards 34. I have an update for you. It's actually lower than that. And we're still accumulating supply. Average price per square foot for pending listings stands at $323 at the start of May, which is the lowest figure for the start of any month since October of 2023. Basically, you guys, the theme of today is low or down. Everything we're seeing seems to be related to that. Now, for the last few weeks, I've been talking about how prices have been coming down, and we just got the affidavits of value for Maricopa County for April, and so I wanted to share what those numbers look like. So for the number of transactions that we had in April, it's actually up 3.9% from last year and up 5.7% from March. So there have been more transactions taking place despite the affordability challenges and the increasing inventory. For new construction, there was 1,609 closed homes, which is up 12.5% from last year and up 7.2% from March. When we look at resales, it's up 1.8% from last year and up 5.3% from March. Now here's where things start to go down. The overall median sales price was $460,990, which is down 3.3% from April of 2024, so from a year ago, and it's down almost 6% from March, which is such a big change in such a short period of time. Now that's overall median sales price, but if we split this out between new homes, we're seeing a similar trend, down 5.9% from last year and down 9.6% from March. And then the resale homes is down 2.4% from April of last year and down 4.4% from March. So resale homes, new construction homes, all have gone down in price year over year and month over month. However, we are seeing an increase in the number of transactions year over year and month over month for both resale and new construction homes. Now, they're saying that pricing took a sudden and violent turn south after an upward trend that had been in effect since July last year. The entire trend has been wiped out in just a single month. The median sales price is the lowest it's been since January of 2024, and the new home median is the lowest since September of 2023. And it's interesting because we've started to see some changes in the mix of sales that are in different price ranges. So a while back, I was sharing that the higher end price ranges, luxury was doing a lot better than the lower end. But now as we look at where things are at between March and April, this is specifically for single family detached homes. So the price range up to $500,000 increased by 11%. And this is just in terms of sales during the time of March to April. But previously, anything under $500,000 was moving much slower, and we weren't seeing a whole lot of sales in that price range. Then that mid-range of $500,000 to $1 million actually has gone down 1% between March and April. And then the number of sales over $1 million is now down 11.2%, which that was the front runner not long ago, really kind of carrying the market in terms of number of transactions. They break this down even further to show that $450,000 to $500,000 grew the fastest at 16.6%, and $350,000 to $400,000 grew at 15.5%. And this is the price range that had the largest unit volume of 874 closings. So what does this mean for you? If you're a buyer looking under $500,000, there's a lot more activity going on now. I'm not saying that it's going to be competitive, but there might be a little bit more eyes on the properties that you're looking at as things are starting to move faster. And for luxury, if you were a seller, you had the upper hand for quite a while, but now the number of transactions taking place is going down significantly. Part of that doesn't shock me because we are kind of ending our spring season, which is when we see a lot of luxury sales, but I would expect that to start to change a little bit later in the spring and not so quickly when we're looking at between March and April. So where are we at with mortgage rates now? Let's talk about what's going on this week because we've had a lot of economic news over the last few days. So first of all, mortgage rates roughly unchanged to start a new week. This was as of Monday. They were saying that mortgage rates faced a slight headwind on Monday as economic data caused weakness in the bond market. Typically, this results in higher mortgage rates, but in Monday's case, the damage was minimal. So last week, rates were trending in a good direction for buyers. They were going down a little bit. We had some positive inflation data, announcements around tariffs. All of that helped rates in that sense. But as we got to Thursday and Friday, the trends reversed a little bit. We saw stronger than expected job growth, and that pushed the 30-year fixed rate back close to 7%. However, after all of that, we are still below where we were at a few weeks ago when we were close to 7. We're sitting at about 6.91 today. You're watching this on Wednesday or later, but I'm filming it before Wednesday, so I don't know what is going to happen at the Fed meeting because that could be something that will affect rates as well. So the Fed is meeting on Wednesday. So it's very likely on Wednesday that the Fed is going to hold the interest rates steady. If there is any alternative news around this, it could definitely shift mortgage rates. They're saying what we know about the Fed, they may be forced to bail out the economy by lowering interest rates if tariffs tank the job market. Central bank could also decide to keep interest rates higher for longer to fight inflation if tariffs push prices up too much. So it could kind of go one way or the other. They may face a dilemma of higher inflation and rising unemployment, forcing it to choose which problem to tackle with its monetary policy. They need to keep employment healthy and prices stable. So those are the two main things that the Fed is focused on, and decisions that they are making towards those goals can ultimately affect different parts of the economy, the bond market, therefore affecting mortgage rates. So keep an eye out on what happens with mortgage rates, especially with all of the economic news going on currently. As a buyer, that could definitely change your ability to afford something. And as a seller, if rates start to go down, that typically brings out more buyer activity, which is always good news for you. Now let's talk about this disconnect between buyers and sellers, because it's no secret or surprise. No matter where you live in the country, it's not just a thing here in Phoenix. Buyers and sellers have a little bit of a gap between what they think is realistic as a seller and what a buyer feels is realistic to pay for a home. So Redfin just came out with some data. And before I get there, if any of this is helpful for you, consider subscribing and share this video with someone who would appreciate this info. The typical home seller wants $39,000 more than the typical buyer is willing to pay. They're saying that the $469,000 median asking price is 9% higher than the $431,000 median sales price, which is the largest gap we've seen since 2020. Not super shocking. I mean, 2020 was kind of the last time we saw some sort of reality in this market, and it's been a while. So this is kind of the fallout from all of the changes over the last 5 years. They're saying market dynamics have shifted in favor of buyers, but sellers have been slow to adjust, which is why list and sales prices are diverging. It's also why we're seeing more days on market, because it's taking sellers a longer period of time to realize that no one is going to buy their house at the price they want. Not in every case, but many cases. That's also why we're seeing more concessions, because buyers are like, fine, I'll pay your price, but you need to pay for my closing costs or help me buy down my interest rate. This graph here is showing the gap between the home list prices and sales prices. You can see how it has began to widen more recently, and we haven't really seen that much of a gap. Even when we go back to 2019, it still wasn't as significant as what we're seeing today. I thought this was interesting too. They're saying the gap is widening because list prices are growing more than twice as fast as sales prices. So meaning that sellers are continuing to price their home higher than what things are selling for. Even as sales prices are going down, sellers are still increasing sales prices when they go to list. So they say the median list price rose 6.2% year over year in March, the biggest increase since September of 2022. But the median sale price climbed 2.5%, which is the smallest increase since September of 2023. So we've been having this friction for a while, and now we're finally starting to see the gap where these list prices are not really comparing to the sales prices. So I wanted to look specifically at Phoenix and see how we're trending. And we have a sales price to list price ratio here in the Phoenix metro area of about 97.4%. I showed this not too long ago. We've gone down just a little bit as we've gotten into May, but we're not too far off. The last time we saw a similar reading was in January. So this isn't new to us this year, but the trend is definitely starting to go down, at least since February. Now, if you're curious what the sales price to list price ratio is in your city, check the description below. You can click to request that information. Now, keep in mind, this is the final list price before we actually see the sales price. So that means that the seller could have taken multiple price reductions over the time that they were on the market. And then whatever that final price is before they go under contract is what this comparison is of sale price to list price ratio. So as we know, there's a lot of price reductions going on. It's more than likely that this true starting list price to sales price ratio is a much wider gap or a lower percentage than what we're actually seeing on this chart. Now, the other thing that's important to look at if you're a seller and if you're a buyer is the listing success rate by calendar month. So where we stand today is 64%. which is the lowest that we've seen in a little bit. The last time we were around 64% was January of 2023. Now, this is taking into consideration throughout the month the success of the listings that actually closed versus the ones that expired and canceled off the market. So, albeit this is a low reading, it's not quite as low as we saw in 2008, thank goodness, at 21%. But even as we were recovering from 2008 in April 2010, and over here in February of 2011, we were seeing some similar readings. Now, we're also at 66% in 2013, 2014, as we approached more of a balanced market. So we're not too far off, but again, clearly trend is starting to go down, and we know a lot of the factors in the market that are making it more difficult for sellers to see success. Now, we have been looking at active listings every single week. Here is where we stand today at 26,543. You can see the previous years recently, going back to 2020, how much higher we are in terms of our active listings. But I don't think it's a true comparison unless we see some other years that are pre-pandemic, because of course the pandemic years were a little wonky. And someone had requested to see the active listings in 2009 so we could compare where we're at today. And I think that's really fitting with knowing that the CMI has gotten to the same point that we saw back in 2009. So let's take a look at the number of active listings. And we're not that far off. As we got into the summer of 2009, we were about 32,000 active listings, and today we're at 26,000. Now you'll notice between last week and this week, we saw the slightest bit of a little taper off here. I don't know if that's going to stick, but that'll be something to watch. But we're really not too far off where we were in 2009. Now, 2008 is a different story. 2007, a different story. That is when we had 50,000 plus listings on the market. So we are not close to that type of crisis at the moment. But it's fair to say it's just been an upward trend with active listings this year. So we'll have to see, and we're getting awfully close to where we were in 2009. Now, the contract ratio, according to the Cromford report, is going down closer to 34. But when I look at it today, it's actually 32.7. They are correct. It has just been going down the last few readings here. Every single week, we've been seeing the contract ratio get weaker. And what the contract ratio measures is the number of listings on the market that are available for sale and how many are actually under contract. So, it's that ratio of how many are under contract and how many are available. And right now we're seeing a lot more available than are actually under contract. There's a lot of green on this chart. I'm going to make this go forward to today's date and make sure we're getting the most recent look at this. But most of the green is a balanced, warm market. So not bad, but we are seeing some areas of blue, which is going to be a cold and colder market. You can see like in 85034, we have a contract ratio of 13, and there's 16 active, only 2 of those are under contract. Now, keep in mind, only 16 listings is not a great, sample set for us to be measuring from, but it gives you an idea of kind of the demand in that area. 85014, 134 active listings and only 23 are under contract. That's why that is considered a cold zip code. So I like to see the contract ratio because it gives us a really good idea of the activity in that area. Whether you're a buyer or a seller, this information can be helpful. So check the description below if you're interested in that. You can click to request some more information about the contract ratio in your zip code. Now, we've been looking at the monthly median sales price the last few weeks, and we saw that prices are going down. $449 as of April. We'll get updated info for May as the weeks go on. But since March, we've seen a pretty big decrease in the median sales price. So let's take a look at the CMI across the valley for every major city. We've got a lot of red arrows still at the bottom of the table, seeing those strong green arrows popping in as we saw last week. The average change has moved more in the direction for buyers buyers once again. So it's negative 3.2% month over month change versus last week, I think we were negative 2.8%. So seeing some acceleration again in a direction favorable for buyers. A lot of these cities losing ground. Some of the front runners like Scottsdale is now in a balanced market and getting closer to true balance and possibly a buyer's market if we can continue to see these changes. It fell out of a seller's market because last month we were seeing it at 117. Remember, anything under 110 is considered a balanced market. And then we've got Phoenix right on the cusp. The only sellers markets that remain are Glendale, Fountain Hills, Avondale, and Chandler, all of which are still pretty weak sellers markets. It's definitely interesting times, things we want to continue to watch because we have started to see a crack in prices. We're starting to see a weakness in the market, and we're approaching a time of year that is not necessarily our strongest time of the market here in Phoenix as it relates to prices. So if you are someone looking to sell your home, just know what those conditions are, and the market's pretty price sensitive right now. And if you're a buyer, you have some good opportunity in front of you, depending on your needs, what you're looking for, and if it is the right time for you to buy a home, you can definitely negotiate in concessions. You can definitely negotiate a lower price. We are seeing a lot of flexibility on the seller side, and the ones that aren't flexible seem to remain on the market for a much longer time. So if any of that info is helpful to you, the sales price to list price ratio, the listing success rate, or the contract ratio, you can check out all of that below. Request more info there to help you on your buying or selling journey. Thanks for joining me this week. I will see you guys next week with my next market update.